Welcome to the deep dive. Look, you're busy. You want the important stuff from data without wading through it all. So today we're giving you that shortcut. We're diving into the Employee Engagement Benchmarks Q1 2025 report.
Yeah, this is based on over 500,000 employee responses just from January to March this year. So pretty current stuff.
Exactly. It gives us a real pulse check on how people are feeling at work. We're going to break down four main areas.
That's right. We'll look at eNPS, that's Employee Net Promoter Score,
Yeah.
then the Overall Engagement Index,
Huh.
also survey response rates, which are quite revealing, and then some other interesting bits and pieces from the findings.
Basically, all the key signs of workplace health you need to know about. So let's start with eNPS.
Okay.
Now, eNPS, it's basically built on one question, isn't it? How likely are you to recommend your company as a great place to work?
That's the one. And the score runs from, well, -100 way up to +100.
And they're benchmarks for what's good,
Well, yeah.
right?
Yeah, definitely. Anything over, say, +41 is considered outstanding. Then you've got +21 to +40. That's very good.
Sure.
Typical scores are sort of in the -10 to +20 range. But if you see -11 or lower, well, that's flagging up some real concern.
Got it. So what did Q1 actually show across industries? This is where it gets interesting for, understanding the wider picture.
Well, hospitality came out on top with an eNPS of 37,
Wow. Okay.
followed by professional services at 33 and tech at 26. So those are pretty healthy scores, suggesting decent satisfaction there.
Makes you wonder why, doesn't it? Maybe industries like hospitality, prof services, they live and breathe customer experience, so perhaps that focus naturally extends inwards.
That's a really good point.
Yeah.
Could be that link between employee experience and customer experience is just, well, baked in there.
Then there were some sectors showing improvement, which is good news.
Yeah, housing associations were up to 24, health hit 21, manufacturing got to 18, and construction reached 14.
So positive movement there suggests maybe things are starting to turn around or initiatives are working.
Exactly. It shows progress is possible even when things are tough. It's a good reminder for everyone listening.
But, there were some real low scores too. Government was way down at -23.
Oof, yeah. And retail wasn't great either at -13.
That points to some serious challenges, doesn't it? Things like burnout, maybe structural issues, pay concerns.
Absolutely. Negative scores like that often signal systemic problems. Heavy workloads, maybe budget cuts in government, huge pressures in retail. It reflects real difficulties for employees in those sectors. Urgent attention needed, really.
Okay, let's slice it by company size. How did eNPS look there? Because that adds another layer, right?
It really does. The
Yeah.
smallest companies, 0 to 250 employees, they actually led the way with an eNPS of 24.
Interesting. Though slightly down on their average.
Just a touch, yeah. Their 12-month average was 27.1. So still strong, but maybe feeling some pressure. It likely comes down to those close-knit teams,
Yeah.
direct leadership access,
Makes sense. What about the next size up? 251 to 500.
They were stable, but lower at 14.0. And that kind of fits the pattern, doesn't it? As companies grow, things get a bit more complex.
Yeah, maintaining that initial buzz gets harder.
Exactly. Communication lines lengthen, management layers increase. It can dilute that feeling of connection.
And then the 1001 to 5000 group.
They were quite low, actually, just 4.0.
Only 4. Wow. That suggests that size band might be a particularly tricky one.
It can be, yeah. You may be past the small company agility, but haven't quite got the robust systems of the really big players yet. So inconsistencies can creep in.
And the really big ones, over 5,000 employees.
Their score was a bit volatile. It went up to 19 early in the quarter, then dropped back to 14.
Fluctuation like that in a huge company. What could that mean? Maybe big initiatives landing, then fizzling, or just the sheer difficulty of keeping everyone engaged.
Could be either or both. Maintaining a unified culture across, tens of thousands of people is inherently challenging.
So the bottom line on eNPS seems to be smaller often means happier recommenders, probably due to that closeness. But as you scale up, especially past 500, eNPS tends to drop.
That's a key takeaway. It really highlights the need for very intentional strategies around communication, leadership visibility, and culture as organizations grow. Size definitely impacts sentiment.
Okay, let's shift gears to the engagement index. Now, this is Hive's own metric, right? Goes a bit deeper than just the recommendation question.
That's right. It looks at three things specifically: pride in the company, willingness to advocate for it, and overall loyalty. uses a 0-10 scale, and 7 or above is seen as positive.
And what was the overall trend here in Q1?
There was a slight dip. It went from 7.1 in Q4 last year down to 6.9 in Q1 this year.
Okay, not huge, but noticeable. Any idea what drove that?
Yeah, the report specifically pointed to a drop in the loyalty score as the main driver.
Loyalty. That makes you think. The report mentioned January being a time people look around for new jobs. Could it be linked to that?
Very possibly. If people are exploring options, maybe that long-term commitment feeling softens a bit. It just underlines that organizations constantly need to work on keeping people feeling valued and connected.
Yeah, makes sense. The report mentioned Hive has a specific question bank for retention, too.
Exactly. Tools to help dig into what keeps people loyal.
How did this engagement index look across industries? Any surprises or similar patterns to eNPS?
Some familiar names at the top. Professional services and tech both scored 7.8. Housing associations were also strong at 7.6.
So consistent high performers. What's their secret sauce, do you think? Meaningful work, good leaders, clear career paths.
Likely a combination of those things. The report suggests factors like feeling your work matters, having supportive leadership, and seeing a future for yourself are key drivers in these sectors.
And at the other end, let me guess, government and retail.
You got it. Both came in lower at 6.4, echoing the eNPS findings.
So consistent challenges there, maybe around recognition, workload, that work-life balance piece.
That's what the report hints at, yeah. Those daily grind factors that can really impact morale and loyalty.
It's interesting how the report links high scores to investing in culture, communication, and people-led leadership.
Right. And suggests the lower scoring sectors might need to focus more on building trust, psychological safety, making it okay to speak up, and providing clear growth opportunities. They mention Hive actions as well for turning feedback into actual improvements.
Crucial point. It's not just about asking. It's about doing something with the answers.
Absolutely. Showing people their voice matters is fundamental.
Okay. And what about organization size for the engagement index? Same trend again.
Pretty much, yeah. Smaller organizations, that 0 to 50 group, they did well again. Their EI was 7.4 in March.
Reinforces that idea of the close-knit environment fostering stronger connections.
Seems likely. More direct contact, maybe a stronger sense of shared purpose, feeling more seen as an individual.
And the big players, 5,000 plus so.
Still struggling a bit relatively, with an EI of 6.7 in March.
So that challenge of maintaining connection and a cohesive culture at scale persists. Communication breakdowns, maybe less individual recognition.
Those are off of the factors, yes. It just gets harder to maintain that personal touch and ensure everyone feels connected across such large, complex structures.
So the story holds for the engagement index too. Smaller tends to lead, larger faces, more hurdles.
Exactly. Scale presents engagement challenges that need real focus and specific strategies to overcome.
Right, let's talk response rates now. It might sound a bit, operational, but it tells you something important, doesn't it? How willing are people to even give feedback?
Absolutely. A high response rate suggests people think it's worth their time, that maybe something will happen with their feedback. Low rates? Well, it could mean cynicism or just feeling disconnected. It's a signal about trust and involvement.
And the report showed big differences between industries here. Hospitality was really high.
Yeah, an amazing 85% response rate in hospitality. That's huge.
Wow. Suggests they feel safe giving feedback, maybe? Or that the process is just really well integrated.
Could be both. Maybe a culture where feedback is genuinely encouraged and acted upon. It implies a relatively connected workforce.
Government was pretty high too, wasn't it?
Yes, 79%.
Yeah.
Still very good. Shows most are willing to participate, though maybe some room to make it even easier or more impactful.
And then manufacturing and construction, more moderate.
Solid rates, yeah. 59% and 58% suggest feedback mechanisms are in place, but perhaps they could boost completion further, maybe highlighting the what's in it for me more clearly.
But then technology, that was surprisingly low, right?
It was really low, just 22%.
22%. In tech, that seems odd given how digital they are. Any thoughts why? Survey fatigue, not seeing results from past surveys.
Could be any of those. Fast-paced environments, maybe a perception that feedback doesn't lead to change, or even just difficulty cutting through the noise to reach everyone effectively. It's a bit of an anomaly.
So clear differences. Some industries are getting huge buy-in on feedback. Others really need to work on making it easier, more appealing, and demonstrating the value.
Precisely. It's about building that culture of participation, showing it's not just a tick box exercise. Accessibility and demonstrating impact are key.
Now, flip it to organization size. Did the response rates follow the engagement trends? Or was it different?
This is where it got really interesting. It was different. The largest organizations, 5,001 plus employees, actually had the highest response rate, 62%.
Really? So lower engagement scores, but better participation in surveys. How does that work?
It suggests they likely have more sophisticated processes for getting people to respond. Dedicated comms teams, maybe better tech platforms, perhaps more top-down emphasis on hitting participation targets.
Ah, okay. So the process might be more robust even if the underlying sentiment is lower.
Exactly. Mid-sized ones, 251, 500, were also decent at 56%. Solid participation, room to grow. But the
Oh,
1,001, 5,000 group, they dipped again to 43%. Maybe reflecting those connection challenges we talked about earlier, impacting willingness to respond to.
could be. Feeling less connected, less sure your individual voice matters in that size bracket.
Potentially, yeah. And then, counterintuitively perhaps, the smallest organizations, 0 to 50, had the lowest response rate at 38%.
That is surprising, given their higher engagement scores. Why would that be? More informal feedback channels used instead? Less focus on formal surveys?
Could be. Maybe feedback happens more organically day to day, so formal surveys feel less necessary.
Hmm.
Or they might just lack the resources or expertise to run large-scale survey campaigns effectively.
So the key takeaway here is don't assume high response rates automatically mean high engagement or vice versa.
Definitely not. Larger companies might be better at collecting responses, but smaller ones might have happier people who just don't use the formal survey route as much. You need both metrics for the full picture.
Yeah, you really need to look at the sentiment behind the response rate.
Exactly. What people are saying is crucial, not just if they're saying it via the survey.
Okay, that brings us nicely to the everything else section. This is where we get into the themes popping up in the feedback, right? The report listed the top 5 engagement themes for Q1.
Yeah, and these are gold dust, really. They tell you it's consistently on employees' minds. The big liver is influencing how they feel. Kind of a roadmap for where to focus efforts.
So, what were they? Let's see. Number 1 was confidence, motivation, and communication, especially around strategic direction,
Uh-huh.
knowing where the ship is heading.
Second, leadership behaviors. Always crucial.
Always.
Third, inclusion and belonging. Feeling like you fit in and are valued.
Foundational.
Fourth, reward and recognition. Feeling appreciated for your efforts.
Yep. Critical for motivation.
And fifth, growth and development. Having opportunities to learn and progress.
Absolutely. These 5 themes really cover the core elements of a positive employee experience, don't they?
They really do. They feel like the fundamentals.
So, wrapping up this deep dive into the Q1 benchmarks, what are the main headlines for people to take away? We saw that slight dip in the engagement index driven by loyalty concerns.
Yeah, that's a key flag. We also saw clear differences in eNPS and engagement by industry and significantly by company size, with smaller generally faring better on sentiment.
And those interesting contrasts in response rates, bigger companies getting more responses, but not necessarily better scores.
Right. And finally, those powerful themes coming straight from employees about what improves their experience and what makes a truly good day at work, focusing on leadership, communication, growth, recognition, and belonging.
This kind of benchmark data is so valuable, isn't it? It gives you context for your own situation, helps you see the bigger trends.
Absolutely. It helps organizations understand the landscape, see where they fit, and pinpoint where they might need to focus their efforts to build a more engaged, productive workforce. It's that essential first step.
So maybe the final thought for everyone listening is this. How do these trends resonate with what you see and feel? Whether in your own job or in the organization you work with or lead, which of these numbers, these themes, hit closest to home for you right now, and what might that be telling you? Something to chew on, definitely.